have a look at is post-balance sheet events. So post-balance sheet events, again, something that's quite topical. For the last few years, we've been speaking about this in terms of COVID. And I think one of the dangers is that we're only thinking about COVID now when we think about post-balance sheet events. And it's really important that we are thinking more broadly about post-balance sheet events. Okay. There are two types of post-balance sheet events. You'll know this: adjusting and non-adjusting. Adjusting is where we get more information post-year-end about something that was actually happened and was in place at year-end. So it affects the balances that we're showing at that date. Non-adjusting is where something happens after year-end. It doesn't affect the balances at year-end, but it's important for the user to be aware of. An non-adjusting event, we simply disclose in the financial statements. Adjusting event, we put a journal through. We're adjusting the financial statements for that. Non-adjusting, we would simply disclose where that is material. In terms of disclosure requirements, there's two places. There's a note to the financial statements, and there is a note in the director's report. Okay. Now, it's a little bit confusing because the note to the financial statements is required whether or not there is an adjustment. So you always have to have a note in the financial statements. If the note says there are no post-balance sheet events, that's fine. You have to have the note even where there are no post-balance sheet events. For the director's report, you don't have to have the note where there are no post-balance sheet events, but where there are post-balance sheet events, you do have to have the note. To make it simple for yourselves, always just put the note in both documents and always copy and paste the text between the two notes. The last thing you want is the director's note saying that there are these 3 post-balance sheet events, and the note to the financial statement says, oh, there's no post-balance sheet events. And I've seen it happen, and it just makes you look not very bright. So please just copy and paste, make your life easy. Copy and paste. You don't need to be clever about the wording. You don't need to be different or think about it in different words. Copy and paste it. It's fine. Make your life easy. Okay. For auditing, now I know it's financial reporting session, so I'm going to try not to talk about auditing much. But do remember that you need to get sufficient evidence around your post-balance sheet events. And really, we're looking at anything that happens from the date of your year end. I'm going to switch to the next slide because we have a nice timeline, and I love a timeline. I love anything that isn't actual words.
Almost as much as she loves a flowchart, I tell you. She's easily pleased, as our Lindsay.
You're looking at anything that happens after your year-end date. So we've used the example of 31st December 2021. And before you actually sign off or issue those financial statements. So we're signing off here in May. Sorry, we'll just go to there. We're really looking at that period. So making sure that when you're signing off the audit reports, if it's an audit, or where the directors are signing off the financial statements, where it's not an audit, anything that happens between those two dates, you do need to include in the post-balance sheet event notes. Okay. And then for the period afterwards, you would simply consider that if you're the auditor, if you're just the accountant, it's non-audit, you've no obligation there. If you're the auditor, you've no obligation, but if something comes to your attention through some thing that you're doing, either for the client, for somebody else, through the media even, you would then discuss that with management. And if you need to adjust the financial statements, you would discuss that. You would do a bit of extra audit work. You may consider your opinion there as well. Okay. So just to be aware of that, it's really about looking at what's happened post year end. Is there anything that we need to either adjust the financial statements or we need to disclose in those financial statements? Key considerations, Brexit and COVID, those are behind us now. They are still impacting us. Okay, let's not think that we are out of the woods here. They are still impacting, but they're not post-balance sheet events. These have happened before. So where they are impacting your clients, you can still disclose it. You probably should still disclose it, but the post-balance sheet events note is not the right place to do that. Okay, so they're no longer post-balance sheet events. They can still be disclosed. I'm not saying, that they're not having an impact. In a lot of cases, they are still having an impact. You should disclose it, but they're not post-balance sheet events. Something that can be a post-balance sheet event, Russia and Ukraine. So do think about that. The attack began on the 24th of February 2021. So for your December 2021 year ends, there are still, 24th of December 2022. So for your December 2021 year ends, there could still be a post-balance sheet event, depending on how much impact they actually have on your companies. Okay, so do think about that. If you have companies that do have, maybe a subsidiary in the Ukraine, and it's maybe a 31st of March year end, and at the 31st of March, you couldn't get any information out of the Ukraine, any information you're getting subsequently can be a post-balance sheet event as well, and you'd need to consider how you go about either disclosing or adjusting for that. So something to have a look at and keep an eye out. It's not as simple as, well, my company has nothing to do with the Ukraine. It has a very wide impact. So you do need to think about if that crisis has had any impact on the supply chains that are affecting your clients, customers of your clients, any requirements to comply with sanctions as well, any general impact on stock markets or foreign exchange. So even if your client is an aircraft leasing company and they had significant business dealings with Russia or the Ukraine, you'd consider, well, how have they been impacted? Do we need to make a disclosure on that?